Hello, my name is Paul Niven and I've been the manager of the F&C Investment Trust for just under 10 years. The Trust has served retail shareholders since 1868 and our primary objective is to deliver long-term growth in both capital and income. We've delivered over 50 years of consecutive annual increases in dividends and the Association of Investment Companies have classed us as a dividend hero. Our investment process starts first with consideration of strategic asset allocation, where we want to invest over the long term. Second, we consider the tactical investment environment, where we seek to take advantage of shorter term market opportunities while avoiding threats to our investments. And third, critically, having determined the appropriate portfolio composition, we look to add value through stock selection from a range of diversified but focused investment strategies. Starting with strategic asset allocation, we focus on global growth assets and invest predominantly into listed equity, but we take full advantage of the investment trust structure to also make selective investments into private equity. We expect private equity exposure to account for between 5 to 15% of our assets, which is meaningful enough to contribute to the overall investment outcome, but not too large as to be challenging during periods of market volatility. We invest via both third-party managed funds and also via co-investments, which means that we own positions in private companies directly. Another part of our strategic asset allocation framework is gearing, also known as leverage. We work very closely with F&C's independent board of directors in terms of strategic borrowing decisions. In recent years, we've borrowed just under £600 million via long-term fixed rate debt at an exceptionally low overall fixed cost of around 2.4% per annum, with the view that in the long run, our investment returns will exceed this cost of borrowing. After the strategic allocation process, we consider shorter-term tactical opportunities. Here, we analyse the economic and market backdrop, taking into account factors such as market valuations and investor sentiment. This analysis helps us to decide on short-term geographic, sector, size and stylistic positioning within listed equities. For example, in recent years we have actively managed our exposure to listed smaller companies as well as growth and value segments of the market, while proactively managing our cash positions to take advantage of changing conditions in listed equity markets. The third area of our investment process is stock selection. We have a small number of specialist, focused global strategies which are combined with regional portfolios. These regional portfolios cover areas such as the US, as well as Pan-Europe, Japan, and emerging markets. Each strategy has a limited number of stocks, around 20 in Japan, 40 in Europe, and so on. Our experience has taught us that in the long run, there's a positive return associated with certain underlying stock characteristics, such as high quality, high growth, and low valuation. By actively managing the allocations, we can reduce the risk of underperformance for end investors while enhancing returns. In terms of support that I have in my role as manager of the Trust, I lead a 25-strong multi-asset team which manages a total of £45 billion in client assets. In addition, we have a team of 16 experts in manager selection who oversee a further £60 billion of assets. Both teams have strong track records in terms of benchmark outperformance. Given the breadth and depth of investment capabilities within Columbia Threadneedle Investments, we have found that blending internal and external strategies has led to a cost-effective solution which delivers strong investment outcomes for shareholders. We currently have approximately £1.5 billion of our listed assets managed by third-party experts such as JP Morgan and Barrow Hanley, and have made almost £300 million of commitments in recent years to private equity specialist Pantheon. A key component of Columbia Threadneedle Investments' responsible investment capabilities is the integration of financially material ESG considerations into our investment research and risk monitoring process. In addition, we actively engage with companies in our capacity as stewards for our clients' assets and seek information and improvement around ESG practices that we believe can help deliver long-term financial value. Our dedicated and substantial responsible investment team works closely with underlying analysts and portfolio managers. In summary, in seeking to deliver long-term growth in capital and income, our investment process captures a diversified range of listed and private market opportunities. We offer an actively managed portfolio with strong performance at an attractive low cost, and it is for those reasons we feel we are exceptionally well placed to continue to deliver strong returns for our shareholders into the future.